Hello everyone, welcome back to our channel CA Aspirants Comfort Zone. Today we'll be revising chapter number 7 of audit, that is completion and review. Objectives of auditor regarding written representation. The short form is ROSE. To respond appropriately, to obtain written representation, to support other evidences. Management from whom written representation can be requested is internal counsel, staff engineers, actuary. SA 560 says that adjusting event and non-adjusting event, that is AS4, that we have studied accounting standard 4, we have studied in accounts, right? This is all about that is 560, adjusting event and non-adjusting events. Audit procedure for events occurring after balance sheet date and before date of auditor's report. Obtain understanding of procedures management has done to ensure subsequent events are identified. Inquire with management whether any subsequent events have occurred with effect of financial statements. Reading minutes of meeting of owners and TCWG with that have been held after date of financial statement and inquire about matters where minutes are not available. Read entity's latest subsequent interim financial statements. Date of auditor's report but before financial statements are issued to the members. The auditor has no obligation to do anything after the report is circulated to members, but if he would have known, he would have omitted then. Discuss the matter with management, determine whether financial statement needs amendments, and inquire how management intends to address these financial statements. Coming to SA 570, auditor and going concern assumption. This topic is very important. Anybody who remembers 570 will be remembering going concern. Who remembers 560 will be remembering AS4. We'll remember it in this way. Three indicators are financial indicator, operating indicator, and other indicators. Additional procedures: management assessment, evaluating future plans, analyzing financial aspects, inquiring legal aspects. What are the financial indicators? Net liability or net current liability position, negative operating cash flows, fixed term borrowing approaching maturity without realistic prospectus of renewal or repayment, or excessive dependent on short term borrowings, indication of withdrawal of financial support by creditors, adverse key financial ratios, arrears or discontinuance of dividends, inability to pay due to not complying with terms of loan agreements, change from creditor to cash on delivery transactions with suppliers, inability to obtain financial assistance for essential new product development, other investment requirements. Now let's read about the operating indicators, that is management intends to liquidate entity, loss of key management without replacement, loss of major market, labor difficulties, shortage of important supplies, emergence of highly successful competitor. Other indicators are non-compliance with capital and other statutory or regulatory requirements, pending legal cases if successful will result in claims entity can't satisfy, changes in law or regulation, uninsured or underinsured. If he finds the indicator, financial indicators which create doubt on going concern assumption, reasons, financial impact of such indicators are: communicate to management and TCWG. If reply from them is not satisfied, report in the audit report. Factors to going concern are: size and complexity of the entity, nature and condition of its business, judgment about future, degree of uncertainty. Studying about SA 260, which is not so important, the significance of communicating with TCWG. Matters to be communicated are: plans, scope, timing of audit, independence requirement, responsibility of auditor is to form an opinion on financial statements, significant findings from audit. In case if this essay comes, the possibility of getting this question is high, the other questions are very low. So I have mentioned this question in this essay. Coming to SA 265, deficiencies in internal control to TCWG. Deficiency means exists when control is missing or is unable to prevent or detect and correct misstatements. Significant deficiency, those that in auditor's judgment are of utmost important and whose probability and impact is high. Determination of significant deficiencies are: we have to do one or more procedures. Studying about SA 450, evaluation of misstatements identified during the audit, sources of misstatement arising from other than fraud, identify inaccuracy in collecting or processing data, and omission of amount, incorrect accounting estimate due to incorrect fact, judgment of management, the selection and application of accounting policies. Request written representation but not provided by management, then we have to discuss this matter with the management, re-evaluate the integrity of management, take appropriate actions. The objectives of auditor regarding written representation are: to obtain written representations, to support other evidence, to respond appropriately. If you like If you like this session of important questions, please do like, share, and subscribe to our channel C Aspirants Comfort Zone. In case of any suggestions or any mistakes, please comment down in the comment section that I'll be improving in the next coming videos. Please subscribe to our Telegram channel so that you'll be receiving the notes very soon in the Telegram channel. Thank you. Keep studying. Happy learning.